So bro, in this video, I will be going through like the entry setup, okay, the trade setup, and also entry how you're going to enter your trades using what I've discussed with you yesterday. Okay, so yesterday we went through how to identify POI. So I hope that you are already that you already you've already studied that and understand the whole process of identifying your POI. So in this particular video, I'll be going through the entry setup and then the trades itself. Okay, so here you can see what I wrote. I analyzed the 1 hour time frame for potential trade setup. So we look at the weekly and daily time frame to mark out our POI. So also something that I forgot to mention yesterday. So these POIs that you are marking out here on the daily time frame. Okay, these POIs are marking out on the daily time frame. You also do that on the weekly time frame. Okay, you do that on the weekly time frame first, and then come down to the daily time frame and do the same thing. So what you're looking at is weekly and daily POIs. Okay, so each week, after every week closes, you're going to mark out the previous weeks. Okay, before every Monday trade, you're going to mark out the previous weeks high and low, and then look for other POIs, be it volume break, be it other block reversal, be it supportive or resistive areas. You're going to mark them out on the weekly. So also remember that the weekly you are going to see less of those. Why? Because it takes a long time to form. So you're going to see less of those things that you're going to see on the daily. And on the weekly, you don't want to cluster your charts. Okay, you don't want to cluster your chart. Even on the daily, you don't want to cluster your charts. Don't let's say for example you see a daily POI which aligns at the same points as a weekly POI. It has to be the same points. So there's no need to mark them out. But if they are, let's say, 1 or 2 pips apart, you can still mark them out as well. Okay, so as long as you see the POI and it's valid, make sure that you mark it out, because price is going to use it at some point or the other. And after the week is done, you are going to look at the weekly time frame and check the POIs that are still valid and those that are not valid. Then you delete the ones that are not valid, just like you are going to be doing on the daily. So everything I explained that you're going to be doing on the daily for your POIs is going to be exactly the same for the weekly time frame. Okay. Moving on into today, let's see finding trade setups and entry. Okay, so analyze the 1 hour time frame. So the only time frame you're going to be needing, is the weekly time frame, the daily time frame, the 1 hour time frame, and then you can use the 15-minute time frame to. With the 15-minute time frame, you're only going to use the 15 minutes to look at supportive price pattern, like price patterns that actually supports what price is doing. So let's say price pattern like Fibonacci retracements, like head and shoulders pattern. Okay, all these patterns are going to show you whether the price is going to go up. So from the lesson this thing PDF I shared with you before. Okay, if you check that PDF, you're going to find I think a chapter where it's written price patterns. Okay, so some of those price patterns there, not all of them, some of them you're going to be looking at for them on the 15 minutes time frame, just to add extra confluence to your setup. Okay, you're not just looking at the 15 minutes time frame for any trade. You don't use the 15 minutes time frame for trade. It's just to confirm if this thing is actually a fib setup to aid our buyers, or to aid the setup we already have. Okay, so that's extra confluence. Okay, for example, these things here are confluence. These things are what are going to confirm if you are to buy or you are to sell. Okay, so that's why this is on my journal. So if I'm looking for buys in a particular area and everything is looking like they are aligning, I come to this and check which ones here are aligning. So if I can get 3 of any of these, if I can get just 3 from this whole thing, I enter the trade. So let's say if I see a setup, I check this and say, okay, there is a daily key level break. Okay, the daily key level just broke. I mark it out. there's the fifth setup, I mark it out, and then there is momentum, I mark the momentum out. So these three now, only these three now confirms that I'm going to buy. Okay, it's a good buy because there are three confluences. So, but then for some trade, there are going to be more than three confluences. So one of my rules is that as long as we don't get anything up to three confluences, I don't take the trade. It has to be three confluences before I take any trade. Okay, so also add that to your confluences as well. And then if I'm looking for any three of these or any of these, I don't want any one of these things to be showing on the chart. I don't want to see any of these before I enter trade. So even if I get 7 of this confirmation and then I see one of this thing or that setup, I will not take the trade. Okay, these things are what is opposing our trades. Okay, so if I can go back to this, I analyze the 1 hour time frame for potential trade setup. These setups are formulated when price meets at least 3 of the criteria listed in green here, while also avoiding any of those listed in red, which are these ones. And then another thing is momentum is crucial and must be present for any setup. Okay, any setup you're going to see. Let's say we have 1, 2, 3 showing up for a particular trade, and you don't have momentum, you don't have this one. This one now, I should actually put this in a different color. This one now is important, is the number 1 that you are going to be looking for in any setup before you take it. This must be there. There must be momentum. It must show you that price, that okay, if you want to buy, it will show you that buyers are coming into the market, or it show you that sellers are coming into the market. It must be there. Okay, so bear that in mind. Okay, so the momentum candles closure serves as our entry point. Okay, while we're waiting for this moment, while we're looking for this momentum, is this candle now. The momentum candle is what serves as our entry and also our stop loss. Okay, if you see a momentum candle, that momentum candle, the low of that momentum candle is going to be our stop loss, and the closure of that momentum candle is going to be our entry. Right, so what do I mean by that? So let's say for example, this is actually a trade that I looked at today. I didn't actually take this trade because I was in a buy, and I failed to realize that this trade is going to turn against me. I wasn't paying attention, and this thing turned against me, and I took a loss here. Okay, so what do we have here now? You can see this is on GBP JPY. So let me go to, if I can go to the daily time frame. That's 1 day here. Sorry about that noise. It's work. It's from my workplace. Okay, so here you can see I have for GBP JPY, I have weekly grid. So let me start from the weeklies to explain this whole thing now. Okay, so from the weekly time frame, here, so what you can see is that okay, so yeah, what you can see is on the weekly time frame, I mark out my weekly POIs. So for my weekly POIs, I call them weekly grid. Okay, if you see weekly grid, that's actually my weekly POI. So here you can see you have weekly, so I indicate that as W, which is weekly. Okay, and then you can see that we have this swing low here. I have this higher low, and then the lowest point, and price went up, and then price came down and broke this low with this particular candle. So this particular candle took out liquidity from this low. As you can see here, it swept this liquidity here. So this candle now swept this liquidity, and this continuation, after this continuation, you can see that we have a gap from here, between here and here. So that's why I had this particular weekly level here. Okay, and you can see how price reacted to that weekly level and started dropping. Okay, so another weekly level which I have here is the previous week's high. Right, I have the previous week's high here, and I have the previous week's low here, and then this one here is, you have this weekly high here, you have rejection, that's resistance, we have rejection, another resistance, that we have break. And I expect, remember what I said on the previous video, I expect if I have this sort of resistive area, and then the resistive area is broken, I expect price to come back to that area and use this as support. So as price has come back to this area and use this area as support now, after this week I'm going to be taking off this level. Okay, no, I'm sorry. I'm going to wait for price to do something at this level, either continue up or break this level. Once price breaks and closes below this level, I'm going to take this level up off, or after this closure and then the next week retest this thing again and continue up. I'm going to take this level up because no longer when the price I've already come back to it and used it. Okay, so that's for my weekly time frame. Then going down to the daily time frame. So if you go down to the daily time frame, you're going to still see those weeklies are visible. And so now you can see that this particular day now, okay, this particular day just dropped, and where did it find its support? It's find support on that weekly, right? And also you can see Monday, Tuesday, and Tuesday came into this weekly grid here, stayed above it, and then Wednesday. So Wednesday now tried to break above Tuesday's high, couldn't break above Tuesday's high, and it's dropped and found support on this weekly, and then now we have broken that weekly and we are finding support on another weekly time frame here, on another weekly POI here. Okay, so explaining what I have, these levels I have here on the daily. So number one is this high is here. So this high is actually remove this. So this is Tuesday's high. So after the closure of Tuesday, before Wednesday opened, I marked out the high and low of Tuesday. So you can now see price pierced the high of Tuesday but couldn't stay above that and close below. So that's why this level is still valid. This level is still active, staying there. Okay, so and then another thing is, now that we have gone into Wednesday today, which is Wednesday now, I had to use the high of okay, today is Thursday. I have to use the high of Wednesday and then the low of Wednesday, but I didn't mark out the high of Wednesday because price is actually a bit far from it. So if I see price coming close to this area, I would have actually put this high on, but because it's far I didn't put it. So I have the low there. Okay, low of the previous day, and then these highs, what are these highs? These highs are actually, so number one here for this size, this one I don't think this is not valid. Okay, it's not valid. Why? Because there is no enough volume here to actually signify that this is another block. This candle needs to close with huge volume. Okay, so and then I have these highs marked out. Why do I have this high marked out? Because you have these highs from Thursday last week, and we have this spike above the high and close below. So this is actually resistance. And then on Monday, price gapped up and broke these highs, and I was expecting price to come back to retest this high as support to either go up or go down. But now price has broken this level and also broken this level, so I will be taking off this one and also taking off this one. But for the sake of this example, let me just leave them there. Let's just say that this candle now, if I can take this thing back, okay, let's just say, okay, yeah, so let's just say that this thing haven't happened yet. Okay, this particular day, which is Thursday, haven't happened yet. This is what we are going to have. And then I have this low because price on Friday pierced this low and couldn't break below that low. It's still staying above. But I think after the close of Thursday also, this low will be taken out, this one will be taken out, this one will be taken out. They are no longer valid because price have already used all of them. Okay. I think this one will be there because this thing is support, and then price has broken that support. It's fine. Come back. It's probably will come back to use this as resistance and continue to drop, or come back to it and break and continue to go up and continue to go up. So yeah, this is the markup for markup going into this particular day. Okay, if I was looking at it on Wednesday, okay, this is actually what I was looking at on Wednesday. This whole thing here, I was looking to trade. I was looking at all of these areas as points of interest where I could either buy or sell from. Okay, so if I can just cancel that because you can't take this thing into lower time frames. Okay, you can see now this is what happened. So now how could I have framed a trade from these levels here, because you can't just take a trade on the daily time frame. So now I'll go down to 1 hour, the 1 hour time frame. So what do I see? What do I see here? So what I actually saw on this first trade, right, took here. Okay, because I actually saw price came down with momentum, and okay, you have the break of this low. So this is actually a trade. This is actually a trade on this one. So I missed a lot. I missed a lot this week. So this is actually a trade. So you can see the low of Tuesday. We have the break of that low. We have the retest of that low. We have the volume continuation. So you have this break and then the retest. With this retest here, you can see this retest and price was dragged down. You can see this drag here because a lot of buyers came in for this retest and then price dragged this down to this point. This is volume coming in. This is selling pressure, selling volume coming in. So this is actually a trade on its own. So how many confluences do we have? We have the break of the previous day's low, we have the retest of the previous day's low, and we have the volume coming in after the retest there. So that's your entry, and your stop loss will be at the high of this low. Sorry, at the high of this volume candle. Your entry is going to be immediately this volume candle closes. That's when you are going to enter. Right. So yes, these are our trade, and then your take profit is going to be as 1 to 3. I always go for 1 to 3 take profit only. 1 to 3. So entry, stop loss, take profits, and you can see this thing hits in just one candle, right? So let's just take that one off. So the one that I actually took, I actually took is this one. So after price I've rejected as okay, it's faked out on this daily candle here. Okay, now this fake out, like it looks like this daily has been broken, and then price came back above that daily, and then what happened again? Price rejected that daily, retested that daily again, and when it retested, you can see where this candle went to. This candle went to this low, and price managed to pull it back up. So this is actually volume. It's actually signifying that buyers are coming into this market. And then another thing I have is a fib setup from here to here, or to this high. So this fib setup, I'm going to also explain this. So you have a fib from here to here. You can see price retrace back into this level of fib, this level here, retrace. I was happy to take this trade. Okay, I was happy to take this buy here. So my entry was after this candle closed. Immediately this candle closed. So I'm coming to my chart every, let's say for example, I'm looking at the 1 hour time frame to trade. I'm trading on the 1 hour time frame. So after every 1 hour, I'm looking at the charts before the 1 hour candle close. So let's say for example, I want to look to for a particular trade around 12 o'clock. So by 11:50, I'm looking at the charts to see if there is any opportunity by 11:50. Okay, so if there's any opportunity, I will spot that by between 11:50 11:55. I already confirmed that okay, this is my setup. I'm just waiting for that time, that candle to close, so I can enter. So immediately this candle close, I entered there, and my stop loss was at this low here, and my take profit was 1 to 3. Okay, 1 to 3 here. And then what you can notice is that price started moving up, and then got to this previous day's low again, and started using that low as resistance. So you can see price came to this low, just try to go above it, stayed below, try to go above it again, stayed below, and then try to go above it for the fourth time, also try to go above the weekly grid. So now what you have here is you have a weekly grid rejection, you have a daily low, previous day's low rejection, and then we have volume coming in. So you can see the amount of volume coming on this candle, saying sell. Okay, saying sell on this candle. So this candle went up at a particular point. This candle was bullish to this point, and then price was dragged back to the opening price and also dragged below. And you can see how big that candle is at the closure. So this thing is now confirming that price wants to go down. And we have a lot of confluences coming in here. We have the rejection, weekly grid rejection, we have previous daily low rejection, we have momentum candle coming in, that's also volume candle, and then we have fib from here to here. So you can see A to B, and then price retraced into 62% and also 79% here. And if I spotted this and I was in this trade, what I would do is to close this one. After this candle closure, I will close this trade and then open a sell trade here. So this is what I missed. Open a sell trade here. I have your stop loss above this level. So now this stop loss is 75 pips. So because the stop loss is 75, from my rules, my trading rules, which we are going to go over very soon. So if my stop loss is bigger than 70 pips, my target is going to be 1 to 2. So this 1 to 2 means if I'm risking $100, I'm looking to make $200. But if my stop loss is less than 70 pips, okay, if it's less than 70 pips, I'm looking at risking $100 to make $300. That's a 1 to 3. Okay, so for this trade now, this is 1 to 2, and you can see that after this closure, we have this big drop here, and then within 1 hour, 10 minutes or so, you're already taking your profits from this particular trade. Okay, so you see how we're able to frame this particular trade. We are able to frame this trade from these daily areas here. So we got like for this particular day, we were caught like this first trade 1 to 3, the second trade 1 to 2. Okay, now you have 5 hours. So let's say you are risking $100 for each trade. You're going to make $500 today, just today alone. If you're risking $10, you're going to be making $50 just today alone. If you are actually switched on and understand what is going on. Okay, so this is actually an example of a trade which I was involved in. So let's look at trades that let's just open a chart. Let's just open a chart which I've not been trading, and see what we can find on that particular chart. So let me pick any charts. I can go to, let's say GBP NZD. So I've not traded this particular, but I've not traded this thing before. So let's see what we can do with this. So we start from the weekly time frame. Okay, so from the weekly time frame, what are we looking at on the weekly time frame? So on this weekly time frame, the first thing we are going to spot is you have this bullish candle move here, and then all of a sudden you have the bearish move. So this now is another block candle. So how do we mark out our other block candle? We mark out this high, okay, and then we mark out this closing price. That's our other block candle on the weekly. So that's the first thing we are spotting here. So another one is, because we're looking to trade on this particular week, so this week have not closed, so you can see that this thing is another block candle because this week is still active. Until this week closes the way it is now, that's when you can confirm that this here is another block candle. So you're going to mark out this and this, but for now it's not. So what do we mark out with? We are going to mark out the previous week's high and the previous week's low, and also this low is very important because you can see we spiked through that low. So here we have this, I have previous week's high, I have previous week's low. These two are actually a bit closer to each other, but it's still the setup, so it should be there. Okay, so after you have marked out this weekly, so you can see, you already understand why I have all these weekly levels here. Alright, so we then go to the daily. So what are we looking at on the daily time frame? Here, on the daily here, we have number one, you can see the break of this high. Okay, so the break of this high, this particular high here, this is the candle that broke this high, and then we have a gap here, and also we have a gap between here and here. So that gap, we have a daily there, a daily point of interest there, and also a daily point of interest here. Another thing is we have continuous bullish movement, and then suddenly a collapse in price. So now we have this high, and then we have this one. Okay, and what else we have? We have a previous. Okay, due to this Wednesday's high, Wednesday's candle, it spiked through this Tuesday's high and couldn't go above it. It just spiked. That means this resistive area, right? So that's an important area. So then we have previous days low. It's actually very close. It's actually very close to this, so we can just leave it there. It's quite close, and then we have So these are our areas we're looking for on the daily to trade. Now if you can go down to the 1 hour time frame to see if you can find a setup to trade on this particular day. So what we have here is we have the opening price came low to this previous day's low, respected that low, continued drop, break of this weekly. Okay, you have previous days respect, you have the break of weekly grid with volume. So 1, 2, and then volume, which is 3. So that's a confirmation to buy. That's a buy confirmation because you have 3 confirmations there. And then you can see the price gave you, so this thing is 41p, so your this thing should be 1 to 3. Okay, 1 to 3. So now you can see the price gave us this move. It moves from here, gave us some profits, and then what you can see is that all of a sudden price just collapsed, right? It just collapsed and took us out. So this one is going to be a loss. Okay, so it's going to be a loss. So but then another thing you can notice here, is we have this price movement, and we have this huge drop. So what happens to this drop? We have the fake out of a daily key level. Okay, so a fake out of daily key level, also a fake out of a weekly grid, and then okay, this whole thing is fake out of this one and also a fake out of this one, and now we have a momentum coming in here. So can we see this a fib retracement? You can see this a fib retracement. Why? Because this low didn't break this one. So it's one of the rules of fib. When we are looking at fib, you are going to understand that it's one of the rules of fib. This low should break this one first before the retracement, before this fib is valid. So it's not valid. But then we have 1 confluence, 2 confluence, 3 confluences, which is the volume or the momentum, and then we have price staying below. Price is below 2 levels, so it went above 2 levels and is below 2 levels now. So you can say this thing is actually a change of direction. So you can enter a sell here. Your stop loss is going to be above here, and due to the stop loss size there is 77 pips, we are going to be going for a 1 to 2 risk to reward. Okay, 1 to 2 risk to reward. So now your TP is here. Okay, so that means you'll be taking 1 loss and then 1 win. So this win now, if this thing is TP, is going to cover your loss and then give you profits. Okay, because you're risking 1% to make 2%. Right, so this is actually the stress setup for this particular pair for this day. So let's see if you can look at another pair. Let's find another pair. So I don't trade this thing, so I'll delete this and also delete all these things. Remove all the drawings, and then we check out another pair. Which pair we're going to check out? Okay, let's do this one. Let's do GBP AUD. Okay, GBP AUD. So again, starting from the weekly time frame. Starting from the weekly time frame, let me take this everything. I don't want any without drawing on this chart. Starting from the weekly time frame. So what do we have on the weekly time frame? So here you can see first thing on this weekly time frame is we have this resistive area. Okay, you have this weekly high, spike above that, and then this particular week I've already spiked above that as well. So that one is very, very important there. And then another thing is previous week's high and previous week's low. Okay, so aside from that, any other thing I can see this week, and you have the following week spiked above it and couldn't close above it, so that's a resistive area as well. But then we are looking at trading this week, this particular week here, which we are in. So I believe that's all for the weekly time frame. Yeah, that's all for the weekly time frame. Any other thing? So you can also keep this one in mind, because you have this week you have spike above that week, we have break, so we're looking for a retest into this area. Okay, So have that one in mind as well. And then if you go to the daily time frame, so now this is where the weekly started. This Monday. Okay, so Monday started and it started going up, up, and then you have traction here. So this this is another block candle here. So you mark out this high and this closure. Okay, and then here you have this daily highs, you have the spike above that, couldn't close above that. That's an important area. Still market out is a resistive area. And then again we have this low, we have this low here, we have the spike through that low and close above. So we could have marked that daily high, but it's already been catered for by the weekly. So what we are going to mark it as is this particular, this yesterday's high, this yesterday's low, sorry, and then yesterday's high. So this is all we are going to be looking for to take our trade. Also we have this particular highs here, which price broke with this candle, and then this candle has you can see that we have this thing here, we have a gap from here to here, but then you can see that the gap is already catered for by the weekly, just at that point by the weekly grid. So now we are good to go to look for trades on this particular day here. Okay, so now if you go to the 1 hour time frame for this day, so this is where the day started. The day started here. Okay, so and what happened is you can actually see a very good trade here. So it started from here, price started going down, tapped into weekly grid, couldn't stay at the weekly grid, breaks that grid, right, and we tested the grid here, and broke the daily and retested here. So there's actually no trade here. There's actually nothing to actually tell us that there is a trade here. So a good trade would have been after this weekly grid fake out. We have the break of this daily, and if you had the retest, a nice retest, that maybe after this retest price closed around this area, we could have gone in for a price. But you can see that price retested this area and ran and closed at this weekly grid. So and then at this weekly grid, you can see the price wasted time there, like 1, 2, 3, 4 hours. So it faked out this weekly grid. It looks like it's going up, and then price broke back below this weekly grid, and then we have the retest of this weekly grid and continuation. So this retest here, I don't like this retest because it's too, like the price is already moving, so your stop loss is going to be big. So this is not a good entry because price can retrace. So now what happened? So let's say for example this price broke, and then we have this retest, and this candle now actually closed around, let's say around here. I would have entered this thing, I would love to enter this thing for a sell, but because of this closure you can't be entering sales here. So then what happened is that price came back, retested this weekly grid again. Okay, it tested it, and then you have this volume coming in. So imagine this candle was actually at this point before, and then price managed to, like sellers managed to drag this whole candle down for it to close at this point, which is serving as a retest of this level. And also we have the fake out of this level. We have the fake out of this level, break, retest of this level, and then volume coming in as well. So these are this is an entry signal after the closure of this candle. Immediately this candle closes and this one is opening, that's when you're entering your trade, and your stop loss will be above these highs. Okay, this stop loss is 29 pips, it's not up to 70 pips, it's not more than 70 pips. So our take profit is going to be at 1 to 3. So 1 to 3, boom. This is where you're taking your profit. So you can see now from here you have, after this candle, after your entry here, you have 1 hour, boom, close to your take profits, and then the following hour, I think you're going to be lasting in this trade for just 1 hour 10 minutes or so before you take your profit. As if you're risking $100, you're going to be making $300 on this particular trade. Okay, right. So let me take that off, so you can see how we're able to frame trades from these whole areas. All right. So you also need to understand what we're looking for, how these candle formations are coming in, to let you understand what price is actually doing. Okay, you need to understand the candlestick formations to know what price is actually doing, right? So I hope with these few examples you understand how to mark out POIs and then how to look for trades within POIs as well. Right. So yeah, I will upload this video and then get on the next one, which is actually risk management. Okay, and then how to build your trading rules and all of that. All right, take care.